look at its price action in the past, it does just that, right? Once it gets under these resistant lines, it can easily drop, or if it breaks above this historic, you see how we had this big gap and how fast the price moved up and moved down between these support and resistant layers. So, what does all this mean when you're trying to enter and exit a trade using the wolf chart? So, in simple terms, after you get a confirmation, what do you need? So, is it good enough just to get confirmation that the stock price is about to try to go up? No, that's the first step. You want to know that price is about to go up, but you also want to know that price can go up and hit a level where I can make some money. So if we go look at that, like let's look at Tesla for an example, because Tesla's been dropping back down. And if we look at Tesla on like a 15-minute chart, so let's look at Tesla on a 15-minute time frame. We're in this downtrend, right? We just lost the 200, right? But you see how, let's move this chart over to the left. I mean to the right. And we can look over here, right? I'm gonna turn my VRVP off for a second. So we can focus on these lines. So this is what'll help you to know when you can get into when the trade setup looks good. So you see between this thicker historical support and resistance line. So the thicker the line, the stronger the support or resistance, right? So here between 466.29 and 473, that's a really nice trade range where you can make some decent money. But you see how now these lines are getting kind of close between 480, and then you got a $3 move down to 476. Then you got a from 476, almost 470, you might well call that 477. From 477 down to 473, that's a $4 move. And then you got this little tight range between 480.50 and 481.80, right? And so if you look at price, you see how price pushed down, hit that level, wicked off of it, hit that level, bounced back down. It's ping ponging in this range. It pushed up, hit 480.50, pushed back down, hit this level, dropped to like $3. But this is happening in like 15-minute candles. So if you scalping, that's decent for scalps. But where's the A plus trade set up at in this one right here? What's the big trade? When you break above 482, you can easily get up to what 490. So that's an $8 move that you can take your time with. When you break 473.84, you can easily drop down to 466. This right here is more choppy. Even though you got a decent range, $4. If you're scalping, you can do that. You can make those moves. But you see how once we drop back down in this little choppier range, out of this range. So look at this room. You got an inverse. I mean, you got a bearish arc, but look at you have actual range right here. So from this bearish arc, from this support line, from this resistance line down to this big support line, you got like $5, $6, right? So if you drop, you got this little range, and it did come down here and wick off of it and bounce back up. But these are your bigger A plus ranges, these two. This little area right here, you can trade it, but it's gonna be you have to take smaller moves because it's gonna chop, right? It's gonna chop in that range versus you get a bearish arc and you see that you about to fall off. You got a bearish arc that lets you know the stock price was coming down first. You lost your 12 flipped to red. That lets you know that you just lost a short term trend, right? And then you coming down and you got a lot going on down this area, right? So you got your 200 is bullish, right? So that means when you come down to Tesla, the furthest you can take this play, you're not gonna want to try to say, okay, look, I'm gonna come straight down and I'm gonna come all the way down to this green order block immediately. Well, now you can clearly already see that you're gonna come down and you got an A plus trade, but you have to play it down to the 200 because you're playing puts against a bull trend, right? So if you losing your 12, anytime you're above the 200 and you're counter trend trading, your target is going to always be the 200, right? So if you above your 200 and you're buying puts, if price gets anywhere near that 200, you go ahead and get out the trade because you don't want to be even as nice as this played out right here. You got a arc and you pushing down. You don't really want to be paying. I'm just on a 15-minute time frame, but I'm saying we look at multiple time frames. But the best thing to do is not to be trying to play against the trend often, unless you have like if your higher time frames are bearish and you got like room, you got an A plus trade, the 15 time frame is not going to trump like a bearish setup on like the 2 hour or the 3 hour or the 4 hour or the 1 hour. But if you're playing scalps, the best thing to do is just to play it here. Once you get to your 200, exit. Because in real life, when you got this bearish setup, even though you're in this A plus trade, if you would have got in under this support level or got in at the arc and pushed down here and stayed in it because you wasn't losing your 12 or you were using Black Wolf and you came up with a scalp or day trade plan and you had everything locked in the higher time frame perspective locked in, and he said, okay, jump in here and just ride it down to this level. When you're coming down to this 200, you see how price got hung up here and bounced off of it as support. But if you didn't exit at 483, this is a huge drawdown for push because it pushed up from 483 all the way back up to 490, 491. So you were to end up getting stopped out if you were sliding your stop loss. So you want to play if you're counter trend trading uh, just from one time frame, you want to make sure you're using that 200 as an exit, right? And I'm not saying that just because that happens sometimes. Just look at this chart and we can just go back and look at every time it counter trended. Where did it bounce from? 200, came closer to 200, bounce, came down to the 200, bounce, came here to the 200. After a little short pullback, bounce, pull to the 200, bounce, pull to the 200, and shot up aggressively, pulled back down to the 200, pushed up. It's doing it over and over again because when the stock is in the uptrend, it's making what? Higher highs and higher lows. And it's using that 200. It's going to either use the 200 or the 12 cloud, which is why we have them on the chart, as reload zones. So basically, you're in an uptrend. The stock comes here, it makes a little peak, a high, and then it pulls back. And you will see Black will say, hey, this is a reload opportunity. It's coming back down to the 12 to test it, to put in a, a, a higher low. And then you get another breaker structure and you push up again. You come back to the 12 and it keeps doing that same pattern. Then when it wants to make a bigger higher low, like from a higher swing, so you got a swing high, swing low, swing high, swing low. It's trying to make it's just coming back down to the 200 cloud to do that. And so so that's why we had a system like that. The WTMA is going to tell you, hey, they moving money out of the trade. It's about to pull back immediately. Then the 12 is going to say, yep, I confirm we're in the second leg of this pullback. I flipped to red to let you know, okay, the short-term trend is bearish now. So we probably finna pull back a little bit deeper. But then the 200 is sitting here say, okay, well, I'm the floor. I'm the dynamic floor. So when you look at horizontal support lines on the chart like these here, these lines, these are what we call static. So these support lines are fixed. They just stay where they are. Historically, this is where price has bounced from. So this is like the floor, right? The 200 acts as the moving averages act as dynamic support and resistance. So they're constantly moving around the chart, but they're still just like one purpose of them is they still act just like these support and resistance lines because they act as support and resistance, right? So if you pay attention and look at it, see, look at this. We end up getting under the WTMA and the signal line. Let's zoom in on this candle. You see how it pushed up and it rejected. This is now acting as resistance. At one point, when we was above price pulled back down to it. It acted as what? Support. And it was dynamic support. It's moving. It's nothing here in this range except for the WTMA and this signal line. This candle came back down, bounced off of it, and pushed up. The 12 cloud does the same thing. Price got under it. We got an open and closed candle, full body and wick under the 12 cloud. Price consolidated. It pushed up. And this was your reload zone for push. It pushed into it, rejected right off of that 12 cloud, pushed down again, came back up, rejected right off of the 12 cloud, came down again, right? Look how this is a wide open trade, right? But look what's stopping it. Not this type of resistance that's horizontal and static, but the dynamic moving cloud pushed up and said, nope, you're not getting above me. Nope, nope, nope. And then when we got a candle to open up with the full body and the wick, not touching the 12 cloud, and it flipped to blue, then it was ready to move up further, right? And so let me refresh this right quick. So we have these things on the chart all serving a purpose, and what you want to look at is that what coach has done is try to simplify it down to colors. So the colors of the 12, when it flips red, we know that the trend, the short term trend, is bearish now, right? The short term trend is in an uptrend. The short term trend is in a downtrend. And so, just like when I teach you all, it needs a strong candle to open and close above it so we can know that, okay, now the short term trend is trying to support an up move. That's the only thing that can flip the color of your 12 cloud, okay? And so here with the WTMA, we just using this lime green line to cross over its own signal line. And you can see the stop price is pushing down, and you consolidating, and then you pushing down. But we never got the WTMA to cross back over its signal line until way down here. And then once it did and closed the candle while it was crossed over, that signal at the same time as getting above the 12 cloud, okay, Tesla's ready to go up now and try to hit this level of resistance. We have an A plus trade between 482 and 490, right? Look where the price came. So these levels are pinpoint accurate because we're not allowing people to draw our levels. I'm not going on here at night and manually drawing everybody's levels out. I wrote code that goes back and look at 400 candles, not 200 candles, not 300, but 400 candles on every time frame, no matter what stock you go to, and plot these levels out so that you can get results like this. When the stock pushes up and hits that, that's a target. That's a take profit level. So you take profit here. It pushed up again, that's a take profit level, right? And so until you get a candle to open and close with the wick and the body under that level, this is a break and retest. You got a dominant candle to break under it. It retested it, and it also rejected at the 12 cloud, and it pushed down, right? So when we're looking at the confirmation system, the thing that makes the inverse arc powerful and the arc powerful is when you partner it with the either order block or structure, which is, saying our historical support and resistance lines. I'll say this: historical support and resistance lines. When you're getting these inverse arcs or arcs as structural support or resistance, it makes them more powerful because you're getting in at a support level and evidence that they're moving money in the background to support this as a good area to buy, right? And also, when you come down to an order block that's already being established, these are also good areas to buy when you get inverse arcs and stuff like that. So say if this was an older swing order block, 'cause I'm not sure if the WTMA beat it. Let's go look and see right quick. I'll go in replay mode for just a second. The WTMA is faster than order blocks in most times. So it'll show you that they've moved money and they bought a stock before the order block even shows up and tells everybody else, right? So other traders that trade with order blocks like us, they'll see these same order blocks, but they can only see this order block, saying once you get a change of character and once certain things happen and stuff like that. So here, let's see, like for example, so we got our lock candle. Nope, that's not locked yet. Let's see. Okay, so we got our lock candle on this candle that gapped up, right? And you see how we know that smart money was moving into the stock. They got in the inside of the WTMA. But more importantly, we got the lock candle here. So we know on December 18th that they're in the trade. Smart money is buying inside the trade, right?